This episode of the podcast is brought to you by Mattio Communications.
Hello, my fellow people of the plant. Let's talk for a moment about brand awareness in the cannabis space. The industry is obviously becoming more crowded as it matures. So how do you effectively break through the noise? We all know cannabis marketing has restrictions that make our jobs more difficult. But fortunately, the kick-ass PR and marketing professionals at Mattio Communications know how to elevate your narrative while staying compliant. Their New York and LA-based teams have the connections and powerful storytelling abilities you need to propel your brand onto the national stage. Mattio refuses to let your bold innovations and ambitious breakthroughs fall through the cracks. They'll get your company in front of your most prized audiences via their specialties, which include PR, social media, investor relations, SEO, and more. Mattio shares your vision of normalizing cannabis for the greater good of society. They proudly partner with businesses across the industry, from investors and ancillary companies to large MSOs and local brands. No matter your business goals, Mattio is here to help. Email them today at info@mattio.com. That's info@mattio.com, or visit their website at mattio.com to get your company the recognition it deserves.
This episode of the podcast is brought to you by our friends at Regrow, the premier cloud-based cannabis supply chain management system.
If you're a cannabis company searching for a strategic business partner to help you automate your business, scale effectively, and make the supply chain work for you, then you need to know about Regrow. Regrow is the first of its kind software that leverages components of leading ERP and supply chain systems with the necessary compliance of the cannabis industry. That's right, you'll get all aspects of regulatory compliance built in, with the added value of workforce management, inventory, SOP management, and reporting and metrics that allow for companies to scale successfully. So stop using the whiteboards, spreadsheets, and email to manage your cultivation, distribution, and manufacturing processes, and instead incorporate Regrow. Visit their website at regrow.io. That's regrow.io. Regrow, the premier cloud-based cannabis supply chain management system. Hello, my fellow people of the plant. Thanks for tuning in to another episode of the Cannabinoid Connect podcast, your favorite podcast that includes industry-facing conversations with the industry's leading experts that aim to educate and inform the public regarding the plant's endless benefits. My guest today is Jonathan Sandelman. He's the CEO at Ayr Wellness. Mr. John Sandelman, how are you, sir?
Kevin, I'm great. Thanks for having me.
Absolutely. I'm very excited to have you on today, sir, and have the company Ayr Wellness be represented. This is the first time y'all have been on. So really excited to dive into the operations and your focus for 2021 and beyond.
What took you so long?
I know I'm working the rounds, and I'm handshaking and I'm networking. I'm new to the industry somewhat, been a year and a half in, but we made it happen, man. So
good for you. Congratulations.
Yeah. Thank you so much. And that's actually a really great segue. I wanted to kick it off by first, letting the audience learn a little bit about you, your background. From my understanding, you're a 30-year veteran in the banking and finance industry. So tell us a little bit about that, serving as the president of Bank of America Securities, and what made you transition to cannabis.
So I started in the finance. I went to law school. I rarely admit it. I got my JD, and for most of the people I grew up with, when I said, "Oh, I'm a JD now," they said, "Oh, we thought you were a JD when you were younger." I meant Juris Doctor. They meant juvenile delinquent. Right? So we bridged that. I went to law school, but my heart was always. I'm a mathematician, so my heart was always in investing and looking at markets in a mathematical way, but it always with the focus on extreme risk management, but creating free call optionality lottery tickets. And that's what we do at Ayr. But today I run my family office. So I got to Salomon Brothers. I quickly became one of the youngest partners at Salomon Brothers, and took on a lot of the proprietary trading and customer businesses. At some point, I was offered to leave, backed by Travelers Insurance. At that time, Jamie Dimon was at Travelers Insurance. Now you probably know he's the CEO of JP Morgan. Mm-hmm. I decided instead to go to Bank of America and essentially have a joint venture to build a financial products business. And what I mean is that we split the economics of our business. That was a business that for 7 years never had a negative month, 36% return. So great team, great culture, great organization we built there. It became very successful. With that track record, they asked me to be the president of the securities company. You don't know me well, but managing, being president at a bank was never my personal aspiration. I was more of an investor. And so I opened up my own hedge fund called Sandelman Partners. It was a relative value hedge fund, employing the same skill sets of relative value, extreme risk management, creating these free call options and lottery tickets, and also creating outsized returns. At the end of 2009, I decided that I wanted to close my hedge fund and open up a family office, and that's called Mercer Park, and I did that. In early 2017, at the family office, we manage our family's money. We get inbound phone calls offering us these opportunities. One of them was this call that went like this. Hey, John, would you like to look at an industry growing at 30%, highly fragmented, limited access to capital? I said, I'd like to see that every day. Now, the lessons I've learned over 30 years, took me a long time, but I got it. Stay in your core competency. Like, just do the things you're really good at and try to minimize those other things that creep into your life that you know that you're just not good at. And I think in life, if you have the blessing to be good at even one thing, or even better than most folks in one thing, you're way ahead of the pack. So when they offered me this, I said, what is it? And they said, it's cannabis. And I said, Kevin, that's not my core competency. It's not like I haven't enjoyed it. I just don't have an edge. I don't have the genius. I'm not better than anyone in this. I hung up the phone. I did a tremendous amount of work. I did the first SPAC in cannabis. I did one of the best performing SPACs in history, which became AYR. And we were the first to start rolling up US assets in the United States. We were the first public company to focus on US assets. So we were clairvoyant back in 17 that the market would start to come our way. Lastly, I'm a guy that believes at a certain age, resumes matter, track records matter. And when I looked at this business, there were a lot of people who hadn't had prior success. And I said to myself, I can simply professionalize what I thought would be one of the greatest CPG business, not reinventing CPG because CPG has been perfected, but appropriating the best from CPG and wrapping it with all the discipline that I've previously demonstrated in our prior business. And that's how Ayr was created.
You nailed it. I mean, when the point that you made is it's well founded and it's valid in that, in a human being's lifetime, if you can find one thing that you're great at or even good at, that's a huge win. And to focus on that core competency is key. And it's interesting how when you were first approached, you were hesitant because it was a new industry. And of course, there's so much to learn, regarding the science and the efficacy and the medicinal value of cannabis, and even the prohibition and the racial injustice that's happened over the last 100 years. So that's a learning curve. But to your point, like a lot of these skill sets can translate over, right? And just kind of be implemented within the industry because those services and that knowledge and that level of expertise is desperately needed right now in such an infant industry. Would you agree?
So when I first started making my acquisitions, and one of the acquisitions I made, and these folks they sold their company to me, but early on we had the conversation and I started talking about my vision of professionalizing this and creating a once in a lifetime opportunity. And guys like me are not driven by money. We're driven by opportunity. We care more about our reputations than anything else. So I'm a guy that tries to live on the genius and brilliance curve. I like to try to think in 3D. What do I mean, Kevin? You make a chess move. I try to make the third move. I define it as airspace and make the market come to us, right? Because that's where the exponential returns are. And when 4 years ago, when I was explaining this to, weed guys, that I'm going to help them with their skill set, leverage it up and create something that is going to be more appealing to a much broader market. They all, when I walked out of the room, they didn't know I was listening, said, he's a suit. He'll
Right.
never get it. He'll never get it. And now, what we say at Ayr, our best acquisitions are when we get a great asset, but more importantly, I've always been a lover of talent. I've never been the smartest person on my team, but what I am really good is identifying brilliant people to come join our culture, because Ayr is only about its culture. And those folks in that asset, it was an extraordinary asset, but we got incredible talent on our team. And if I think you called them today, they can appreciate what I was talking about 4 years ago, because they're living that life today, a part of the Ayr organization.
Mm-hmm. With that focus with Ayr 4 years ago, and then we fast forward now, I know that the recent news was that the newest acquisition within the Ayr umbrella is Liberty Health Sciences, which, as we know, is a distressed, MSO. So tell us about how that, in Ayr's viewpoint, is a strong asset, and what are the plans with Liberty Health Sciences moving forward?
So I always liked Liberty Healthcare, and I always loved the state of Florida. The problem is, when we looked at Liberty stock at a certain point and you looked at the Ayr stock, it just didn't line up. Either their stock was trading rich and our stock was trading cheap. It didn't work. But when we did finally do the deal, so I have a slightly different view on M&A I'd like to share with you. So the way I think about M&A, I think about it as a personal relationship. I had a personal relationship with Liberty for 2 years. I had a personal relationship with the family that controlled both our New Jersey relationship asset and our Pennsylvania asset. What do I mean by that? If you think about an M&A transaction, and I already told you what's perfect for me, I don't want to get my best deal because of the reasons I told you. The best acquisition is I get a great asset and I get more teammates. What's lacking here, what I see in the industry, is because the expansion is happening so rapidly, there's a shortage of talent to execute all these various businesses in all these states at the same time.
Mm-hmm.
It comes down to people, and you need skilled people. So it's a limiting factor. So if I do an M&A transaction and I get this great asset and I get more talent, because I'm only driven by talent, I told you. My philosophy my whole life is talent is for free. It always makes you more in the company and the shareholders more than you could ever pay, right? So if you come from a point of view, you love talent and appreciate talent, I get to do these interviews, but really what makes Ayr is not John Sandelman. It's the 1,500 people at Ayr who all have the same vision, have the same culture, who are all striving to deliver the highest quality weed in scale consistently. That's our mantra, to be able to do it at scale. Now, Kevin, there's plenty of people that can grow good flower on small scale. Who's trying to do it at millions of square feet? So when the consumer comes in, it has an excellent, consistent consumer experience with the best products in the market at a fair price. So Liberty, New Jersey, Garden State, Pennsylvania, it started with a 2-year relationship. Now, why is that important to most people? I don't like to be in auction.
Right.
I'm a loser in an auction because for my shareholders and for my teammates, there's a price where it's no longer good value. So I want to take myself out of an auction process. And how do I do that? By having the relationship. So think about this. You have a weed company, Kevin, and you want to sell it to me. Every deal looks something like this. Okay, the percentages are different. They're all bespoke. They're customized depending on what the seller needs, but something roughly like this. Some cash, some debt, some stock. Now, the way I think about issuing my stock to your family, because many of these businesses are owned by families. When you take my stock, I'm managing your family's money.
Mm-hmm.
and have always taken that fiduciary duty very seriously. So when the sellers think, I'm going to take stock from someone, some company, when they think about who they want to manage their family's money, who's had 30 years of being a fiduciary, Ayr comes to the forefront. And you only get to that point if you have a prior long-term relationship.
Yeah.
So the day came where I said to my team, if we don't move into Florida today, so they're used to this, everything is now, right? If we don't move today, they go, today? Today. Then the land grab will be over. And they said to me, well, what are you talking about? Think about a municipality in Florida. How many cannabis stores do you want in your town? Do you want every store to be a cannabis store? Do you want one store to be a cannabis store? Do you want 2 stores? And so I started to understand if we didn't move aggressively, we would be boxed out of some of the best markets. They're only going to allow a limited number of brands into their market. So I called Liberty and they said, you know, John, this is just sometimes you get lucky. I think luck is by design. I feel that all of us have the opportunity to create our good luck. I don't think I just sit here and the sun shines. Call them up and said, now is the time. Our stocks are lining up right, because that's been a problem. We know we respect each other. I've done a lot of work on Liberty. I'd like to talk about it now. They go, John, we were about to call you and start a process. And I go, that's the luck factor.
And that goes back to your relationship building example, right? I mean, those discussions and that building of a relationship has already taken place. So you to your point, you removed yourself out of that auction kind of bidding scenario, and if you hadn't reached out, they were going to do it, right? I mean,
and you know something, the value. I always hope that the seller thinks not necessarily what's the value of the deal today at auction, but what is the value 12, 24 months out? If I put myself, our assets with Ayr's assets, do we prosper together? Are they great operators? Do they have full control of their business? Are they great risk managers? Are their systems some of the best in the industry? All of those factors factor into the final decision. It's not necessarily the last price. So I'll tell you why I found it attractive. Let me give you a quick math. I told you as a math guy, you'll get it in a second. I looked at Ayr. I looked at Liberty. They were the number 4 in store counts. So I said, wow, that's pretty interesting, right? Because I really want to be a dominant player in every market. I don't want to have 1 or 2 stores. I want to dominate the market, be very, very influential in the marketplace. 2 is sales per store, they were 7. So think about a convergence rate, right? They got the retail, but they're not selling anything in it.
Right.
So then that sounds cheap, right? But we have to examine why. The cultivation was horrible.
And that's a gap that you could fill on the Ayr side.
And so as an investor, when I look at cheapness, sometimes you see something look cheap, right? Kevin, you say, well, that's cheap. Sometimes assets I've seen stay cheap. And if the reason why it's cheap plays to your core competency, to your company's strength, which is we talked about on the cultivation side, then we should make that acquisition. And simply, we understood if we improve the output, they were failing crops at 25%. Think about it. You have all the costs of a 100% crop, and you were failing at 25. So that's not a good outcome. They had weed, they had product 1 or 2 days a week in the store. So Kevin, you're driving in Florida, you're a patient. They didn't tell you if it was Monday and Tuesday. It was random when it was there. So you're driving in your car. There's other stores around that you could buy your medicine. You go, oh, maybe I'll take a risk. I'll go to the Liberty store because last week it was Monday, but the prior week it was Thursday.
Right.
So we said, if we can improve our efficiency and productivity inside, which we're good at, clean it up, stop failing, raise the gram per square foot so that we have flowers 7 days a week, increase the number of strains because we have good genetics, then we have something to offer to the consumer. And what we've seen when we put, as I said to you, the best quality flower in each market, the consumers recognize it and come into our stores. That's our edge, having the best flower at scale. We just tested our model again in Pennsylvania. We had our first harvest, and we've been in Pennsylvania. We were building out our cultivation. We had the best harvest. We grew amazing flower. It sold out in days. And the Reddit review, which I would, if you're bored one day and you felt like reading, the consumer got it immediately that we entered Pennsylvania with our business model, which is the best product at the fairest price.
That makes a lot of sense. And it's a very methodical way of approaching, the value of an asset by just determining, okay, what is our core competency? What are we strong at? What are they strong at? What are they weak at? Where can we fill the gaps? Is this a good fit? Right. And from what I'm hearing, it sounded like they had the retail presence, right? You said 1 out of 4 stores was a Liberty or dispensaries, excuse me. And then they had the other point you made was the 7. They were ranked 7th in sales, right?
Right.
So that makes total sense, right? So when you were having these internal discussions and when you said today we need to be in Florida, and of course you've already explained from your viewpoint of why you needed to be in Florida, what was the response internally?
So they all looked at me. It's hard to deny a state with 21 million people is not an opportunity. They were less focused on how the stocks finally lined up so we were capable. In the past, we couldn't give away 100% of our entire company for one state. So that was irrational. It now lined up, so it was a very rational acquisition for our shareholders. And when I brought it to their attention, M&A team goes in, we start having these conversations. More importantly, the due diligence comes in to make sure we can fix it. And when they gave us the sign off that this is something that's fixable and that we had the internal skill set to close the 7 and the 4 to a 4. And I'm not happy being 4th at anything. You don't know me well. Liberty's internal numbers was to have 42 stores. We have 38 right now by the end of the year. Mine is much more aggressive. I've articulated this in earnings calls and other podcasts that I speak to. I would expect us to be 50 or more by the end of the year and continue that steep curve of opening retail for the reasons I said earlier. Because if you don't make your move and you don't make it aggressively, there's just certain markets within that state you will not be able to participate in.
Right. Yeah. I mean, everything's moving so fast in this industry, both, within the business side, obviously within the MSO sphere, but then also legislation, given this week with Biden's new pick for the drug national policies position, as well as, Senator Schumer introducing that draft bill. And we'll get into that. I want to get your thoughts on the bill and how that will impact the Ayr Wellness business. You touched on, your hyper focus on entering the Florida market. You talked about the strategy, which is of course consistent with Florida in Pennsylvania. You said you're looking at premium cultivation at large scale, right? And dominating these different markets. So is that the similar approach that you're taking within Arizona, Massachusetts, New Jersey, Nevada? I mean, because all these states differ in regulation, are there different strategies, or is it still kind of North Star what you mentioned?
So it all comes down to branding at the end of the day, right? So our brand is to do that at scale. Equally as important, many people in the industry talk about their packaging and their branding, right? For us at Ayr, it's not the box for the reasons I already articulated. It's what's inside the box.
Right.
Many people in the industry say, I want to be like Nike. I want to be like Apple. I don't know if you buy Nike or Apple, but I honestly don't buy Nike because the box is orange. Okay. I buy it because I've been a marathoner my whole life and I like the way the shoes work for me.
Mm-hmm.
I don't buy Apple. Maybe you do because you're really attractive to beautiful white boxes. But I buy my phone because I think it's the best phone, or my laptop because I think it's my best laptop. So if someone's aspiration is to have these beautiful boxes like these other CPG companies, the lesson I learned, it's really not the box. It could be purple. It doesn't have to be orange. It's the contents. And unless you have the goal and you're driven, your brand is driven by quality at scale. In my view, through my investing, anytime a company underestimated the consumer, it may work in the short term, but this is an industry that's going to get more and more competitive over time.
Mm-hmm.
And they're going to taste our competitor's product in a beautiful box. We also will have a beautiful box, but they'll know the difference. And, you know, this is people's hard-earned money, and they want to get the best value. They want to get the highest quality at the fairest price. So it comes down to branding, right? It comes down to delivering a consistent quality product. When I decided what my M&A strategy, everyone has a different one. I respect there isn't one. But my theory, because it's federally illegal to advertise, that I wanted to buy contiguous states and penetrate them. What do I mean? As the consumer travels in their car or flies from state to state, right? When you get to a new state and you see 10 different brands, but you see the Ayr brand, and in your home state, you understood that every time you went into Ayr store, you got this quality. Why, when you go, excuse me, why would you go to another store and take a risk with your hard-earned money?
Right.
So we cluster, we penetrate, and we deliver the same quality. Our goals at Ayr, our goal is to deliver concentrates using the same machinery, the same SOPs, so the consumer has the exact same experience in every state they visit us. Same thing with the cultivation. Same quality, always excellent, and always consistent.
Mm-hmm. Yeah, that's been echoed a few times in this podcast. The the focus on consistency, because to your point, if you're on the shelves of different dispensaries in various states, and a consumer or a customer has a different experience with that product, that may be a detractor, and it may eliminate them from coming back again and repurchasing, right? Because people are wanting that consistency in any type of product that they purchase. So that makes a lot of sense. And your point about premium was also reinforced. I recently had Brady Cobb on, who's the founder and former CEO of Bluma Wellness, and his thoughts were the winners, the people that are the MSOs that are going to come out on top, once federal legalization happens and we're way down the road, it's going to come down to premium, because even new entrants that are coming in now, new customers, they don't know what they don't know at this point, right? So, but over time, if they continue to consume and take this medicine, whether for recreation or for medicinal purposes, they're going to have an appetite to get something that's better and get something better. They're going to want to climb up that, that palette of premium quality product. And so your point is very valid, and it's good to see that Ayr is really hyper focused on not just scale and expansion, but consistency in the quality of the product.
And the learning curve since I've been in it is so steep for the consumer, right? So you think about that. Since COVID, I've been able to get back on the road, and I love being on the road. I want to talk to our bud tenders. They are talking to the consumer. In life, my previous life, I don't like guessing. I'm a problem solver, so I want to hear the problems. And I don't want them edited by anyone. I want to hear them directly to make sure that we are doing what I told you and that the consumer is reacting and understand, right? So yesterday I was in, just say another state, and in a fantastic store, not ours, because I'm always on the M&A trail, right?
Right.
And I asked this person, tell me the brands that consumers come in and ask for. My own market research. Not many, almost none. I said, so what do they ask you for? They're not asking for a brand. What are they asking for?
I could guess probably education around the variant of the different strains or the cannabinoids within the strain. Is it that more of like what this will do to me or how I will feel?
It's who has the highest THC.
Potency. Yep.
So right now, potency. So think about, I don't know you well, it's our first meeting. I really enjoy wine, but I don't think to drink grain alcohol. Maybe you do, you're younger and you like that. But for me, I'd never get up again. So I don't need to blow my head off. I don't need marijuana. And so I think what the educational process, and I saw it in Pennsylvania, we could talk about what we read, is maybe I don't need to blow my head off every time. Maybe I need lower cannabinoids and higher terpene profiles. The new Revel products that we just put into Pennsylvania and Seven Hills that got all these brilliant reviews that sold out quickly. I was surprised because I keep hearing in the market, all they ask for is highest THC. It's 21% THC and over 3% terpenes. And they thought it was perfect. So
Right.
the market is already, that educational process, which I think is steep, is already starting to get the understanding that it's the combinations, cannabinoids, right? And it's terpenes. Brands. People are not walking in, so my research says, asking for specific brands. They will. And in our view, they will ask, as they get more educated, for the brands that are consistent and high quality.
And that's what we're seeing in states that have been online for a number of years now, like California, Colorado. There are, go-to brands that consumers just love because the market has been operating longer than other states that have just come online. So I think you're right that it's inevitable that there will be brand recognition and brand affinity among consumers nationwide, and that's why Ayr, it sounds like, is very uniquely positioned with its consistency, with its high quality to be that household name, basically.
So I agree with you. In Colorado and California, you and I could talk about some names of craft growers that grow incredible products, create incredible products, and the consumer reacts to it. I know I have, right? Oh, this is the best flower, this is the best concentrate. Okay, those brands do exist. Now, can we do that nationwide? Can we do what craft growers and manufacturers are doing nationwide, creating nationwide brands, national brands? And in our view, learning from those experiences you and I have both enjoyed, right? Finding those craft growers that are insanely good because they just are hyper focused on their quality. They're relentless, right?
Mm-hmm.
Think about the MSO that wants to do that at scale in every state, creating the first national brand.
That seems like that's the horse race right now. I mean, not all MSOs, but the top ones. It seems like that's kind of the battle, right? I mean, to see who's going to have the top brand nationwide.
And there will be more than one. So when you talk about it, are we talking about 5 companies in an industry that could be $100 billion at some point? There's room for all of us. Now, in business, you have to acknowledge there's never one path to be successful. There's not one business plan.
Right.
But what I've learned is you got to do the one that plays to your competency, your skill set, your team skill set. You have to have an edge. And so ours is the business plan I'm articulating. I don't hear another MSO say, I want to be the largest scale producer of high quality weed. That's Ayr's business plan. Doesn't mean it's the only business plan, but it's the one because of the assets and the talent pool and the drive for perfection that we have at Ayr. It's natural to be ours. The other MSOs are going down their path, playing to their edges, right? To their core competency. We will see where this all intersects, right? We will see where the consumer is 1, 2, 3 years forward.
Mm-hmm. No, that makes total sense. John, you touched on briefly at a high level your view on and the way in which you approach M&As, right? You're on the ground. You want to hear firsthand from the bud tenders and the consumers as to what's what brands they're have affinity for and what they like, what they don't like. And I know that Ayr has completed or I think it's 7 M&As in the last 4 months. So why don't you talk a little bit about, in more detail, your strategy when it comes to M&As and what specifically those 7 M&As were in the past 4 months?
So we talked about it. We went from a 2-state operator, okay, with some of the best operating financial metrics in the whole industry with only 2 states, right? So we closed our SPAC, we became Ayr, and then what I said from the beginning, because I'm a finance guy, right? And I understood something that I think the market was less focused on, that markets are cyclical, right? They don't go from the left quadrant straight up. There'd be cyclicality. So what I said in 17, that we were going to build a business that was both cash flow and EBITDA positive from day one. And we were, okay? Again, about extreme risk management with a steep, optionality embedded in our stock as we continue to roll. We stopped for 13 months. We did not make another acquisition. Our competitors moved much faster than we did. We paused, we integrated the businesses. The difference at Ayr and M&A, this is very important to us, and very important to our brand. When we close the deal on a new state, they are immediately on all our risk management systems, operational and financial. We have total control, total insight. That's what we spent 13 months building before we continued to buy. I told my team, we overhire talent because when I'm ready to move, we got to have the talent pool for the reasons you and I have already talked about. Mm-hmm. You got to have the talent pool. I collect cultivators. I've created an artist commune to attract some of the best cultivators in the United States for the reasons I articulated. You can't do it on scale unless you have. And we've created an environment where cultivators want to come, A, because they're so appreciated, B, because it's our business model to do high quality at scale. So where do you think you're going to find the best love if you're a very talented cultivator, grower, manufacturer? At Ayr. So I've collected them over the 13 months. I built out our SOPs with the help of our finance team and our operating team. So when we were ready to move, it would be seamless. No different than if I just opened a store across the street. That's what I told them. I don't care where I am. It's got to be that seamless. Many of our competitors still haven't integrated through their acquisitions to a single platform. Okay?
Right.
That's a goal of Ayr. Okay? So what I said to you, M&A, it's very clear. I want to be contiguous. I want to penetrate. I want a great asset. I want talent pool. I want it at a fair price for the seller. I'm never looking to strike my deal, because if I really want the talent the way I just articulated, great asset, more talent, if I took or struck a tough deal with you, Kevin, I think you're going to be happy to be my partner going forward.
No.
I want you to be happy. I want you to be productive, because we need you to grow.
It goes back to that relationship building and the hyper focus on human capital, right? I mean, people want to feel valued, and building relationships with those people is a great way to do that.
Look, we always talk about the greatest asset that's hidden on our balance sheet is that culture, because I'm a culture guy. And if you create, in my view, a great environment where people feel highly productive and like winners, and winners attract winners. Culture attracts talent. With talent, you win. It's not me. I do these interviews, so I get too much credit. It's the depth and breadth of the team at Ayr. I had a crazy goal. Like Florida, when I wake up in the middle of the night and tell my team, I said, the vision and the culture and the drive for excellence here. So you all get it at the management meeting. But if we can do it to the 15th, 100th person, so everyone has their pair of oars all rowing in the same direction, we win.
Mm-hmm.
And when I went on the road last week and talking to people in the New Jersey business, in the Pennsylvania business, they a bit like telephone tag, so it's not exactly what I'm telling you, but the essence of this drive for excellence and consistency and focus on the consumer experience, it resonated. I called my wife and said, of all the things I've done in business, this is the single proudest thing.
Wow. That's huge. And it's so important. I mean, as a former athlete in my younger days, like having the team be on the same page, having the same mindset, the same culture, you all want to be successful and you want to do it together, and you kind of move in the same motion, the same mantra. And so it's really great to hear a leader like yourself who really puts so much value on your employees, your team, and giving them the credit, right? Because I mean, everybody plays a role in this. Everybody adds value in certain ways.
The other thing that I think is super important for us, remember, if your employees are happy, your bud tender is happy and bought into it, they're the ones that are delivering that consistent experience.
Mm-hmm.
Happy people have good relationships with other people. So that's important. But one of the things I think is really, really important for Ayr to execute on is we live at a time where the consumer is moving away from large brands and large companies, and they want to find that crafty local place to buy their coffee, right?
Mm-hmm.
So at Ayr, well, I really appreciate that we have the resources of a large MSO and the access to capital and the operations and the talent pool. In each community, for us, it's extremely important to feel local. Now, how do I do that? I do that by having programs like our accelerator program, that in each state, in each community, we train the people and offer to train people in that community so that they have the same opportunity for this once in a lifetime opportunity to be in the cannabis industry. And so what happens? If you're a company like us who's driven by our ethos and sharing and dedication to your community, and you give people the opportunity because you have these programs, and either they stay with us or they go off and do their own business, and we help them do that. If you train people from the community, when the consumer walks in, why does it feel local? You're a big company. Why does it feel local? Because you see your father, your mother, your uncle, your cousins, your brother, your sister, your friends running the store, behind the counter. So you have that personal community inside our store. And of course, we feel local because we reinvest in our communities. And we make sure that we're offering the same opportunity that we're excited about to everyone.
Mm-hmm. No, that's super important from a consumer perspective. I mean, to your point, like you see the craft beer side, of the sector, and people want to know where this beer was brewed. Even in cannabis or hemp, I'm in Texas, right? A lot of the questions that I get asked is this Texas hemp? Where is it sourced? People really love that local. So it's great that Ayr is hyper focused at the local level within its stores in these different communities. John, I want to switch gears. I want to ask you, we got a question within Twitter, and then this will be a good segue into the higher level federal reform discussion. But the question came in that said, John had mentioned in the past that he would like to see legalization at the federal level postponed so he can make more acquisitions. Does he feel that way still, given light that this week the draft bill was presented by Chuck Schumer's office?
So I really appreciate that question, and that person's absolutely right. So I'm glad that someone is actually listening to what I have to say. So that feels pretty rewarding. Look, right now, it's a great business without federal legalization, right? Think about last March, talk about a milestone, right? When I started this 4 years ago, as I told you, I was a hedge fund manager, and I had other friends of mine who were in the business over for lunch at my house. And they said, "Hey, John, what are you up to?" And I said, "I'm focused on cannabis." And they said, "Are you going through a midlife crisis?" I go, "What are you talking about?" No, that's illegal. What are you doing? You tell us all, and we know you as a person who's honor, integrity, transparency, reputation, and now you're going in a federally illegal business. You must have lost your mind, right? Time has moved on. During COVID, this industry was declared essential. To me, that is an insane, I'm just looking, I don't have to get to full legalization. I just see the catalyst coming. I just see where we are, from Jeff Sessions threatening to put people in jail for being in the business to declared essential. A bill introduced in the Senate. Let's go back a few years ago. We'd hope that happened. Is it going to be this bill? I have no idea. I'm not a good handicapper of politics because there's just too much of it.
Right.
So I'm not going to bother to comment. I'm sure it's not this exact version, but we're going in an insane direction. Okay. It's going the way the industry and the consumer hope for. The fact that when I first got into business, that veterans couldn't go to the VA who had PTSD and get a prescription for cannabis seemed insane to me. Insane. Denying people access to nature's medicine.
It's crazy. Yeah.
Crazy. So this gentleman or woman, I don't know who it is, they're right. Like, it's legal in states. Federal government's backed up. No one's threatening us. The opportunity to continue to buy is there. What I've said to my team, and you've heard other people say this in the past, I don't want to 3 years from now, Kevin, say, we should have done more. We were right there. This is going to be bigger than anything. We had the opportunity and we didn't maximize it. So let them argue in Washington. Love the direction. At Ayr, we need to buy more. I don't want the buffet to close. And when you read the brilliant analysis that Jeffries did in their recent research piece, when you start to compare this industry to alcohol, the multiples will be multiples of where they are today.
Right.
And so I think it's a once in a lifetime opportunity. And I have said that, and I still say it.
It definitely is. And I agree. I mean, your point is very well taken. I mean, from your position, the buffet line is open. And really, federal legalization, I mean, I've heard this echoed from other industry leaders that it really doesn't matter at this point. Now, I know that there are components of a reform legislation that would actually help the industry, right? Like safe banking, the removal of 280E, which is just handicapping, a lot of these MSOs. My question to you is, with Senator Booker talking yesterday and saying there will be no standalone bills that will address just safe banking or just the 280 tax provision, it's got to be comprehensive. I mean, that tells me that, like, to your point, and you didn't say this, I'll say it. It's probably not going to be this bill. It's going to be a reiteration of another bill, right? They're going to have to rework it. But like, what does that tell you when Senator Booker talks about safe banking in that way?
So I thought he said he couldn't support a bill. I don't know how one person could say there won't be a bill.
He did. Let me clarify. He said he wouldn't support a bill that would be standalone. Yes.
Okay, but I think most people in society understand that there's been a lot of wrong to people when it's come to cannabis.
Yes.
Right? And I think all of us that are rational would like to see those wrongs corrected.
Yes.
Okay, so I agree with him. If the politics in the United States was a little more coherent and a little more congenial, I don't understand why all those boxes couldn't be checked. I don't understand why we all would want them checked. Right? But that's not the environment we live in right now. So I don't have a view one or the other. This is not going to happen. I don't have it. There is benefits, as you say, to society if we make the wrong right. I think there's enormous benefit. To say it doesn't help the industry, well, if we live in a better society, how could it not have a spillover effect, right?
Right.
To our business.
Right.
Would it be good for the industry to be banked? Here's something that blows me away. The politicians don't understand that for those that hate our industry, banking it is the best form of control because it'll have complete transparency. So if I looked at an issue that I was nervous about, I would want to control it more, not less. Why have any cash in the system?
Right.
Make everyone bank and you'll know everything about it. You'll know all the cash flows of it. That to me is a form of regulation, not a gift.
Right.
Would the industry benefit from listing, removing the stigma so that the wall of money that's pent up that would love to invest in this once in a lifetime, as we talked about CPG industry, that would be great. Because then the cost of capital, which has been near usually levels, okay? Any other industry that had these cash flows would have much lower cost of capital. But the lenders have been able to lean on federally illegal. It's federally illegal, so we can charge this premium.
Right.
But based on the credit worthiness of this industry, of these large companies, these are great credits. So yes, there would be a benefit.
Yeah.
But
go ahead.
No, please. I'm sorry.
Sorry, I didn't know you were. Go ahead. Finish.
No, I'm fine.
So no, I mean, that's a great point. And there's two other components of the bill that I want to get your thoughts on. One is the taxation rates that they were talking about, starting at 10% and then escalating to 25% by year 5. To me, I mean, if you're at 25% by year 5 at the federal level, I mean, states like California, where you're looking at local, right? And then you got state taxes. And then with this new federal tax, I mean, it seems like it's just really, really hard for a company to either operate or even just enter. I mean, do you think 25% is on the high side, or what are your thoughts?
So my opinion all along is when people talked about, they're going to do away with 280E. We're living in an environment of very large deficits, right? They're looking for revenue all over the place. They're going to give a tax cut to the cannabis business. I didn't see that, right? They get taxes. They're not going to stop taking taxes. Here's where the politicians, they don't define their goal well enough, right? In some cases. Is your goal to support cannabis, take it out from the illicit market to the legal market so that the consumer has access to products that are tested, they're organic, high quality, right? Shouldn't that be your goal? If you tax it, all we've seen in California, the illicit market exists because the tax rate is too high.
Right.
And so the consumer is smoking something that is far more dangerous, okay? Because they're buying in an illicit market versus the market where the regulations are so tight. I think that's a mistake. Go back to when they banned the vape pens. I don't know, people were getting all kinds of lung disease for like a couple of weeks.
Yeah,
How come we never hear? I never hear it anymore.
2019,
What happened to that? How did they stop getting that, right? So what several governors did is say, cannabis industry, you can't sell vape pens. There's a vape pen ban. Now, what's the unintended consequences of that knee-jerk reaction?
Black market, emergence of vape pens within the illicit market.
And what's the quality of those pens?
Harmful carcinogens, vitamin E acetate,
Metals, right?
pesticides, terrible. Yeah.
Right. And now, instead of taking a slow, more methodical approach, we don't hear anyone getting sick anymore. And we're all selling vape pens. And so it couldn't have been us, right? This couldn't have been the issue. But during that period of time, instead of stopping, investigating, coming up with a rational plan, you force the consumer, because they're not going to give up their vape pens.
Right.
They're not going to give up their medicine just because you're acting irrationally. We forced them to something that's way more harmful. So I never thought there'd be a tax cut. I think you're spot on. You put 25 on top of 25.
You're at 50%. I mean, what's
You're
the
hurting
incentive?
the consumer.
Right.
And you'll get zero taxes. So the effect will be, you'll go from 25% in California and 280E. You'll do away to 280E. You'll slap an excise tax at 25, California at 25, and you'll end up with less taxes.
Gotcha.
Is that what they intend? Is that the intended consequence of that? I don't think so.
I sure hope not. I don't know. But it's just, it seems like, to your point, like it's not really thought through. And I love how you put it, like having the end goal or the objective in mind. Like, okay, why are we proposing this type of legislation or this approach, right? What do we want to accomplish, and kind of working backwards, right? From the goal is kind of how you would do it in business or any type of problem solving exercise. And it just doesn't seem very thought through. The last kind of component I wanted to get your thoughts on was the regulation and where it's going to fall. So currently it would basically move from the DEA to the FDA and the Alcohol and Tobacco Firearms Bureau. What are your thoughts there? Does that make sense?
Again, I don't really have strong views on which department's going to regulate it. I understand why it'd be at the FDA. They also, I would hope, if they understand it's coming their way, are starting to invest in the resources so that they actually could regulate.
Mm-hmm.
Look, it depends on your business model.
Right. That would vary. That makes sense.
So here's my business model. I'll tell you what I have always rooted for in life and business. Because I told you I've always invested in my infrastructure, that I've always had some of the best systems, both on the finance side and the operating side. Because I tried to operate at the highest level, and because I understand as the bar gets raised, fewer and fewer people can survive. So we already are gapped. We are already preparing for the listing. We're not going to wait till the day comes that now we're listing and start doing the work. We're already having conversations with the exchanges. We're already preparing for Sarbanes-Oxley. You know why 50% of the companies fail Sarbanes-Oxley audits?
Why?
Because they don't have the people and the process in place. The same thing. I only learned that today, but we've always been doing that. So it's nice to be validated that what you think is important is important. You know, I come from an industry, again, I think at a certain age, resumes matter, track records matter. What was your previous track record? I came from a world, when I was at Bank of America, I had 5 regulators: OCC, Fed, the NASD, New York Stock Exchange. I mean, we had audits. They never came the same time, 5 government agencies. Mm-hmm. It was always rolling. So we had one conference room with everything, and they would just filter in and out. So we at Ayr, most of us grew up in a highly regulated environment. We get it. We get that if you treat the regulator respectfully, that if and when you have a mistake, they'll understand you're very good actors. And it was a mistake, it was an aberration. It's not a policy of yours. It's not a systematic problem. So we welcome the regulators because the bar is going to get lifted on what it'll take to be able to succeed. And because we've been doing that for years now, understanding this day was coming, we welcome it.
Mm-hmm. It goes back to your initial point, like when we first started. It's bringing that level of professionalism into this industry that hasn't been there, due to federal prohibition and whatnot. And that is the value that the quote unquote suits, I guess, bring to the table. But it's super important, and it's definitely needed to legitimize this industry. And so, John, as we close out here, I want to just give you the floor. I mean, you've talked a lot about, Ayr's overall mission, its focus when it comes to M&As, your hyper focus on human capital and processes, so that you're not playing catch up and that you're proactive in your approach. So tell me, I want to just leave you the floor. What's top of mind for you, and what do you want to leave the audience with before we wrap up?
I think what makes Ayr great is our teammates. I think what excites me is living on that innovation curve with them and having the opportunity. What I've often said to them, like, no one's really branded yet, but that company that actually does brand has this once in a lifetime to define a whole industry. So for someone like me, who's never been driven by anything monetary, but I have been driven by creating these opportunities and participating in these opportunities and building strong teams and building strong cultures, that excites me. I think if you look at Ayr, you look at any operating financial metrics, we operate at the top of the industry and we trade at 60% of the average multiple of our industry. It's an enormous opportunity. I was asked in an interview right before you, the interviewer said, John, with easy money and the Fed and, with inflation picking up and maybe interest rates going up, is the market risky? How do you think the industry will do? And this is what I said as an investor for my whole life. If you think the market is going to correct, I'd rather be in a counter-cyclical market. He said, well, why is that? I said, think about COVID, when people were furloughing people were laying off, business was impacted. People came to us for their medicine. It's counter-cyclical. Economy was down. It came to us. Mm-hmm. Business was strong. We provided an essential service. Like that, like being in that industry. When I think about how I construct my portfolio, if I think the market is getting toppy, I would certainly be with some of the best operators at the cheapest multiple. That gives you maximum downside protection. Countercyclical industry, cheapest multiple, some of the best operators in the industry. Now, I've told you all, right from the beginning, anyone who's listened to me, I'm going to be in 12 to 15 states. The one thing I hope the market understands, that through my whole life, I say what I do what I say. So I've stated that publicly. Track record says I do what I say. Watch us. Lastly, for the investors that are listening, this really excites me. When we first started to look at the industry, and as the industry developed, the operators were performing differently. I think now when you look at the top performers, the top companies in the industry, they're performing extremely well. People have very good businesses, not just Ayr. the industry is performing. When investors look at an industry, they first have to determine, do I like the prospects for that industry? Answer is yes. This is an amazing industry. Are there investable assets? Are there companies that are investable? And what's exciting at this moment right now, there are many great operators. And when you talk about multiple expansion, investors are willing to pay more for a multiple if the entire industry is performing as opposed to one company. And that gets me excited.
Very well said, sir. You are super knowledgeable. I got to tell you, this has been one of my favorite podcasts that we've done. I know that I got a ton of information and insights, not only with the Ayr business overall, but just where the industry's at and where it's headed. And I know that the audience got a lot out of it also. So, John, I just want to thank you again, man. I want to have you back on as you guys continue to expand and grow and really set your footprint nationwide. But for the time being, where can people find y'all's social media, website, and ticker information if they want to invest and learn more?
Rob, who's on here, our IR guy, PR guy. Rob, do you want to tell them how they get a hold of us?
I can do that. Our handle, if you want to follow us on Twitter, that's where we have all of our most updates. That's Ayr Wellness IR. The handle is at Ayr Wellness IR. You can also follow John on Twitter himself. He's been on there for a few weeks now at John Sandelman, and he'll be dropping some great nuggets every now and then. And then if you're looking for our full footprint, everything like that, ayrwellness.com is always the best way to do that. Or you can reach out and we'll send you some of this good swag too.
Love it. Yeah, definitely follow John. I know that the cannabis community, the cannabis industry is very active within the Twitter space. So, John, great to see that you're active there. And like I said, man, this has been a pleasure. I really appreciate your insights and look forward to having you on again real soon.
And I hope the next time I get invited that you're wearing an Ayr hat and shirt, because Rob promised it to you.
Yes, I will definitely have it on. And you're already invited. This is your formal invitation. So we'll just make it happen when you're ready.
Thank you, Kevin. Thank you, Rob. And I look forward to it.
Perfect.
Have a great day. Bye.
Yes. Thank you all. And thank you all for listening. Bye.